Welcome back, and joining me for a closer look of the day's trading session is Makwe Masilela from Makwe Fund Managers. Thank you so much for your time, Makwe. Well, let's actually start off with the big news of the day, and that is M&A activity in the food producer space. And that's actually been on the radar of investors for a while. But I actually didn't think it would come in the form of consolidation, where one listed player would be absorbing a peer in the listed space. And Premier is doing exactly that as it moves to acquire Rhodes Food Group. We've seen the share prices of both those companies surging, Premier and RFG Holdings, seeming that investors are bursting with joy there. Is this a match made in heaven?
I think it is to some extent, and good evening to you. And I think it's a big brother acquiring, a smaller player, but a very important player. And maybe just to take it just international as well. Look what is happening also with these packaged food companies. They do that, they try to consolidate, even other guys to try to cut costs. They are cutting employees. I mean, Nestle's looking at reducing almost 16,000 workers over 2 years. But yes, I think this is a perfect match. And I think these guys, since they've been unbundled, remember they used to be Braid used to own almost 97% of Premier before they listed that separately. And since then, the company did well, giving almost double-digit returns on almost all the metrics as it stands. And it's a decent premium. I mean, we're talking about over 36 or 35%. And the guys, which is the RFG guys, they'll ultimately own almost 22.5% of Premier itself. And yes, it's another delisting on the GSE, which is not really good news. But this time around, we are not really worried, because with that delisting, you end up having another big player, because now Premier will become much bigger.
Well, let's actually take the conversation to another level, a level higher, and that is with Braid, because of course we know the last time I checked, Braid had a more than 32% holding in Premier. And of course, this is the second corporate action that we're seeing here through Premier after it relisted Premier on the JSE in 2023. We did see those shares of Braid also climbing over 8% at some point. What does this mean for Braid, that it is now becoming a bigger company, considering that Premier is its cash cow as it continues to sell down its stake?
I won't be surprised that at some point they will try to cash up some of the shares. Remember, this is an investment holding company, and if this kind of transaction trying to unlock shareholders' value continues to close the net asset value, the discount that they're trading at, then that's better for shareholders. And with this 8% increase today, it continued to close that gap when it comes to the discount that the guys are trading at compared to the net asset value.
All right. I looked at the numbers of DRD Gold as it released its quarterly operational update. I think I was underwhelmed by the growth numbers, 2% uptick in production. I even think the gold they sold was up just 1%. And even revenue, I think, was up by marginal 2%, if I remember correctly. And I'm wondering if especially the revenue is just coming from a high base, considering how good the gold price has been.
I think over a period of time, they'll continue to benefit from that. I mean, I think maybe give them a break. I mean, this is only for 3 months, It's not even 6 months kind of a thing. But what was also a concern, or what we need to factor in, is that the cost increased. And one of the biggest cost increases, it was the labor thing. They had to do annual labor increases, that is the wages, and also electricity during this period of time, because apparently Eskom adjusts the tariffs between this, I think between July and August, or in June and August. So that had an impact. But as it stands, with all that cash pile, over $1 billion, the guys, at least they won't just be sitting on that cash. They're going to put that on other operations going forward. And hey, who won't be excited with a company that doesn't have debt? I think we should be excited.
Well, talking about cash, let's go into Cash Build. And they're actually getting more cash. They did say that they're seeing more transactions through the tills. That's translated into revenue expansion of 6%. Not a lot of color in that update, except for a breakdown of revenue. What did you make of that update?
As much as they're not shooting out the lights, but at least they'll continue to make money. Even those transactions that went through the tills, they were up by almost 6%. And of interest, look at their selling inflation, around 1.4%. And maybe it's not surprising when yesterday we realized that our retail sales, the biggest driver, continued to be hardware and DIY. So that talks to what we're seeing with the results coming from cash build.
All right. Well, before we get to your stock pick, let's talk about PSG Financial Services. I think that's the only company that came out with results today. That's half-year results, and we saw double-digit growth in key metrics from total assets under management to headline earnings per share to the dividend. What were the big takeaways in terms of what's fueled this performance?
I think we're excited, but we have to be honest. It's all because of market performance. Look at the written premiums, up only 6%. That's single digit. All these other assets under management are up nicely, double digit. I think it's 19% or so, increasing dividends by 18%, the recurring headline earnings per share up 21%. So if it becomes a reality that this current highs that we see in the markets, they will have to correct at some point, then we'll talk a different story when it comes to PSG. I think we should be excited when we see more of new business that they are writing, because that's more of an organic growth. Not that we are not happy that we are seeing this kind of performance, but we know it's something that can reverse easily tomorrow.
All right. Well, let's take a look at your stock pick. Where are you finding value today, Makwe?
I'm scared. And at this levels, when it comes to the all share, I rather short the market. And as we are talking now, it continues to reach record highs. And my problem here is we are undermining the impact of the shutdown. We're undermining the headwinds when it comes to that tension between China and the US. We know that today Donald Trump is talking to Putin, but that geopolitical tension continues to be a big issue for some of us. And, market participants being market participants, we are happy that this whole market has been going up, but mainly because of one particular sector, which continues to be AI. If it was more of broad-based, and it's all good that that market is going up because of the earnings coming from AI. But my concern here is that it's mainly coming from AI more than anything.
All right. Well, thank you so much for your time, Makwe. Really appreciate your analysis today. That was Makwe Masilela from Makwe Fund Managers.